Well, let me pan out and ask you how fund managers think. Now, if China is not a great growth story, and it seems to be, I don't think they will get to their 5.5, which was the given target. If that happens, do the entire EM funds kitty shrink, or will funds make the distinction and stay pro-EM, but ex-China pro-EM? Is that a possibility?
Lots of questions and lots of thinking around this. And I think there will, the question that clients ask, is China investable? Of course it's investable. The question is where and how, and what do you invest in? It is 30% of the...
But this is the first time they're asking that question, isn't it? Otherwise, China was axiomatically investable.
Right. So there are, we are significantly underweight China, and we're seeing other pockets in our portfolio. There are things to play in China. I call it China 3.0. China 1.0 was 2000, when it was all about manufacturing commodities. China 2.0, which was 2010s, was all about internet, e-commerce. China 3.0 now is all about automation, advanced manufacturing, supply chain diversion, domestic sourcing, semiconductors, and there are a lot of opportunities, because China realizes that the only way they can grow is enhancing productivity, because population is not growing.
Okay. So no, coming back to our point of view, I mean, we have an Indian viewership. Should we expect that emerging market funds will continue to attract, even if China is not a very big, attractive force?
Yes. So
it won't happen that EMs are deserted because China is not doing.
No, because there are many EM ex-China mandates that are being talked about in the market, and also within emerging markets, you really have to be an active country allocator. So you could, emerging market index morphs over time. So in 1980s, I won't let you guess, I'll tell you. Malaysia was 30% of the emerging market index.
Okay.
In 1992, Mexico was 30%. There has been no country that has been able to go above 30%. But the emerging market index still compounded 9%.
So you expect that India can grab a much larger share?
India can grab a much larger share. China reached that peak of 40%, now back to 30%. I think the weight of China in the index has to mean revert downwards, but there will be other players, other markets that will catch up, and therefore being in an emerging market actively managed fund is the way to go.
Okay. Well, the larger question that I have to broach, do you see a recession in the West? That is, Europe already is in, US as well. If that happens, does growth in EMs like India continue, or will our growth suffer because of developed market recession?
Yeah, so I'll answer it. First, I'll answer the latter part of your question. Yes, if US sneezes, India will catch a cold. So I do not think India is, immune to it. It's very linked. The second question is, as you pose, what about recession? So I haven't been in the recession camp for the last year, and I think recession for the next year also is a 50-50 possibility. Now, why has recession probability gone up? Because of monetary tightening, fiscal contraction, oil is up, there's an oil crisis, and there's no China and Europe to the rescue. That's the reason. But we need to really dig it below. What is really happening in the US is, though past recessions have been caused by some of these issues, there is no excessive leverage like the global financial crisis. The consumer, the corporates are not in those kind of elevated debt leverage positions. US wages are growing 5-6%, depending on the metric you look at. US unemployment is 3.5%. There are wage gains. There will be a slowdown, but there is a lot of internal defenses. And oil prices, yes, they impact the consumer, but they help the producer side of the US economy, where shale is a big part of the economy now. So there are these offsetting balances, and I am not sure if we are 100% getting into a recession. We could soft land. Clearly, growth will slow, like we did in the 1965, 1984, 1994, where we could have a soft landing situation. If the Fed were to get very tight, I'd be more worried.
Running out of time, so I have to ask you my final question, and I'm banking a lot on this.
Okay.
If you got $100 today, how would you allocate it? How much would India get? And 3 years from now or 5 years from now, if you had that $100, where do you think the allocation will be? How will India's allocation be higher?
So you're saying where would I allocate it, in equities or in every asset? In equities.
Everything, okay, everything.
So I definitely own some real assets because I think inflation is the name of the game. I mean, it's not going to be 8%.
When you say real, you mean commodities and real estate?
Commodities, real estate, private equity.
Yeah.
We're not going to, inflation's not too...
Okay, let's keep to equities. I think that'll be simpler.
Okay.
If you have $100, which equity market?
I will definitely invest in emerging markets because I think US is at a 100-year high in terms of performance. Within emerging markets, I would have India. It's 15% of the index today. I'd own much more than that.
Okay.
I would own Southeast Asia. I would own some pockets of Latin America. I would own pockets of Europe because I think it's decimated.
All right. Oh, yes. And 5 years from now, do you think your allocation to India is likely to increase? Do you see enough trends?
Yes. I think, like I said, India is 15%. I think India could demand a greater share of the MSCI EM index as this index morphs. I don't know if it'll go to 30%, but I'm sure the trend is up. There are risks, Lata. If oil goes to 120, India is in trouble. If the government doesn't create jobs for the youth, then you cannot have any growth cycle if there's no good employment and there's a skill mismatch. So those are risks. And India has run up. So we are very conscious of the fact.
I was going to bring the valuations argument as well.
Yeah, very expensive market. But it's keeping up with, the valuations have gone up with earnings going up.
Growth.
So, and return on equity going up. Now, if that were to change for any reason, there will be a derating. So this is not going to be a straight line up like everything is.
Yes.
We will be up and down, but I think the structural trend is up.
Okay. Regardless of those caveats, I think this is one of the most bullish conversations I've had. We had a lot of conversations on India at 75, but this clearly is ranking as one of the more bullish conversations. Well, we have to call it a day on this edition of Indianomics. Thank you very much for watching. Stay tuned. There's lots more lined up for you.